I think it was, slightly unfair and, if I may use the word, even naive on the part of the market to expect that there would be big bang announcements right at the beginning. In fact, I don't really attach much importance to those landmarks of 100 days, etc., even though I know that it's a commonly used and popular benchmark in media circles. Look at it from the perspective of what has been done. There are a few things, maybe not really huge or big bang announcements, but still there are a few things that the government has done in terms of the higher FDI limits in insurance, even though that needs to be approved by the Parliament. They're also trying to ease the land acquisition rules and regulations in different states. In fact, many of the BJP-ruled states have taken possibly a frontal leap in this respect. There are obviously certain things which have not really been reported aggressively. Like historically, we had always been giving about 15 to 20% increase in the minimum support prices of crops. This government kind of limited itself to giving just about 3 to 4%. So those things have an impact on the food subsidy and therefore by implication on the fiscal deficit. Now, these are not something huge, but they would have an impact going forward. There are a few disappointments, no doubt, and I would not pretend that everything is hunky-dory. For example, the government still seems committed to investing money in loss-making PSUs. Even in the budget, we had seen several hundred crores being allocated to some of these loss-making PSUs, and that, I think, comes as a disappointment. See, in 2 to 3 years, one has to look at the thematic changes that are likely to happen in India and also in the rest of the world, and particularly in the emerging market universe. So, from this region's perspective, I would think that, the investment cycle, revival of the investment cycle would be a big theme, particularly in India and Southeast Asia. And at the same time, consumption, particularly in the discretionary side, would also continue to be an important theme. So from these two perspectives, in India, I would obviously be overweight on engineering, construction, capital goods sector. But at the same time, I would try to avoid those which are, very highly leveraged and therefore don't really have the balance sheet capability to bid for new projects aggressively. I would be overweight on the consumer discretionaries, which in India you can pretty much play through the autos, the likes of Maruti, Tata Motors, even though Tata Motors is not really an Indian story anymore, and a select few two-wheeler stocks as well. Third, I would continue to like the financials. In fact, from a 2 to 3 year perspective, apart from our preference for the private sector banks, I would also add a couple of public sector banks, because I would think that over the next 6 to 9 month period, we would have possibly heard the worst on their asset quality concerns. I would also have a couple of NBFCs, particularly those which are lending to infrastructure and the power distribution and generation sector. So those would really be my, the prime allocations.